It's not just. I want to share this with you. This is the 2012 report to the nations. It's done by the ACFE. It's based on actual, and for 2012, about 2,000 cases. I think in 2012, there's 1,400 or so cases of actual fraud. And this is a shocking document, really. Let me just share with you the highlights on the front page. And I'm going to make, this will be out in your black, there's the gentleman you just saw in a couple of those videos. But out in the blackboard, we'll have it here. The first one, and I talked about this already, that fraud is 5% of revenue in the average company. Okay? And that, again, I told you the research that Dr. Vassarelli did was that mistakes are probably another 5%. And clearly, and there's other empirical data for this, that in healthcare, it's 10%. 10% of revenue. Now just think about what that is. Again, for Siemens, that's $5 billion. The median loss caused by fraud is $140,000. That means the median for all of these actual cases of fraud is $140,000. Asset misappropriation is the most common, 87%, but the most costly, the ones up over $1 million, are the financial statements fraud, and that's the stuff we talked about, Enron, the WorldCom, the earnings management, those kind of things. The vast majority of all frauds were committed by individuals working in one of 6 departments, and you can see that here, and they were accounting, operations, sales, executive upper management, customer service, and purchasing. Now, I studied these reports very carefully, and there's one every 2 years or so they come out with one, and these have been very consistent in the findings. And this is really shocking, that most occupational frauds are first-time offenders. These are people that never did anything wrong in their lives, have a clean record, you can run all the background checks that you want, and you're not going to find anything. So most of them are first-time offenders. And most, and this was in the 2010 report, but most financial fraud, almost all financial fraud is collusive. And Ariel mentioned earlier, and the one thing I'm going to disagree with Ariel on is that you're done when it comes to collusive fraud. And we'll talk about that in a minute. Just think about this whole system we have in the firms, in internal auditing to address fraud, and it's all based on 4 Eyes principles. It's all based on segregation of duties. So we're not finding these things, and it's a serious issue. And with that fraud triangle, you can see where if people have opportunity, motive, or rationalization, we're going to have fraud, and that exists if someone has someone else to go in on it with in a company. So let me take you through just a couple of the slides here, and just let's talk a minute about a couple of them. So I mentioned earlier 5% of revenue, and this is important. Fraud by its nature does not lend itself to being observed or measured. One of the primary characteristics of fraud is that it's clandestine or hidden. And one of the problems that we have with fraud is that when you do find fraud, I used the example when we were talking about the future of audit, of the traffic light thing, right? You put the camera on the traffic light, and all of a sudden you make $50,000 the first weekend because people are running lights. Then what happens? They stop running lights, right? And so when you put in this perception of monitoring and you stop fraud, it flows to your bottom line. It doesn't flow to the forensic auditing group or the fraud group or the audit group. But it does stop it, and it does improve your business. And some sales guy will take credit for that and say, that was my brilliant sales and growth, when really, or cost management, when really it was eliminating fraud or addressing fraud. So it's a little tough to make sometimes the business case or give credit to the people who really do it. So this just shows the distribution of dollar losses. Less than $200,000, because you have a lot of things that are T&E type fraud, and that is very prevalent. But it's high likelihood, low impact type fraud. People add $10. We used to be allowed at Siemens to do anything under $25. You don't need a receipt for it all. Now it's under $5. But people would say $25. And in the firms, a lot of people go on per diem, and that's not really fraud. You're giving a per diem. But I used to go, and I was on an actual expense report, and I worked a lot with people in the firms, and I go, hey, where do you guys want to go for dinner tonight? And they go, oh, we're going to go over to the supermarket and get a salad. They get, $50 per diem, and they get it whether they spend it or not. So they just save a little money that way. Now, that by the way is not fraud, but that's the challenges of per diem versus regular expenses. And then you see that the biggies, which are 20% over $1 million, are the earnings management type frauds. Okay? So, and again, this is all empirical data. This isn't someone saying, just guessing at something. This is actual based on data. So by category, asset misappropriations, that's all the check stuff. And a lot of this stuff now has gone electronic. It used to be, we gave a lot of paychecks out. We paid vendors with checks. We do very little paying vendors with checks. So now it's IT savvy people manipulating data in a computer, and that can happen, anywhere. Corruption, that's what we got in trouble for at Siemens. And again, I made the case before that, if you don't believe it's 5% of revenue, we got a $1.6 billion fine. We spent $2 billion remediating. That's almost 5% of our revenue for one fraud that we caught, and that was corruption. So if you went in the other categories, who knows how much asset misappropriation, and that 5% is everything from stealing paper clips to Enron WorldCom kind of things, And I'm here to tell you, this is going on every day at Rutgers University, at Siemens, at the firms. It's really happening, and for the reasons that Ariel shared earlier. Of course, the biggest losses are in the financial statements fraud, followed by probably the corruption and then asset misappropriation that people are doing. And some of these are very physical things. People go and they take copper wire in a plant and they throw it over the fence and then come back with a pickup truck and get 20 cents a pound for it. You might not think of this, but fraud also includes me playing solitaire when I'm supposed to be working, or running a business when I'm supposed to be working, or going on a porn site when I'm supposed to be working. That's fraud too. That's very real. And that's a big part of it too. And all of those can be addressed, I'll argue, by creating this perception of monitoring, by this new way of auditing that we're trying to encourage you guys to go out and change. By the way, from that thing, how many would like to be involved in some way in forensic type auditing or fraud stuff? I know you, Jenna. No. Who else? Yeah, other than I mean, it is interesting stuff. What?
It's fun.
Yeah, it is. But you will have your heart torn sometimes because you will see people who really do have a grandmother that's dying of cancer and they needed some money, or you might, love the people you work and live with, and you find you live more with the people that work than you do with your own family sometimes, and they're all going to lose their jobs if you don't, change this provision so that things you make it another quarter before the investment community gives up on your company or the senior management. So you really feel like the hero there. You're saving the company. So that really happens sometimes. All right. This talks about the duration. So how long these go on. And by the way, I think the overall average was 18 months. So that means from the time the fraud starts until the time it's completed is usually 18 months. I think I probably shared this story with you, but when I came in and was running the IT audit practice, we got called in to, I did share this with you, this was one of the classes, we got called in to investigate a fraud for someone who stole $350,000, and they were simply the liaison between the credit card company and Siemens, the travel card company. And whenever there was a credit, a return, a kickback, a legitimate kickback, all they did was said, and the bank called and said, where would you like us to credit this money? And they said, just credit to this account. And they did, and then they took their card and went to an ATM and took the money out. And there was no control around that because this person wasn't spending any money. There was nothing to approve. They were just we were getting a return, a good thing, and they had put it in the wrong account. But that person did this for 3 years and was doing fraud investigation for the legal department and was a very trusted employee in the company. And as Ariel pointed out, usually they are, and as this data points out, usually it's first-time offenders, it's people who never did anything wrong in their life. Okay, and so the other durations ones, non-cash, corruption, larceny, cash on hand, skimming. You guys know what skimming is? Okay. Do anyone know what skimming is? What's skimming? Ying? You know what skimming is? Between what? Yeah, no, yes. Is it what? Cash what? Yeah. What it is on receivables, it's taking cash before you book it, before you take it in. So it's as simple as the guy at the counter selling cotton candy is taking, and recording every other transaction and giving cotton candy out. No one ever finds out. Okay. All right. Next one. Let's just go down here. These are just some definitions. I won't go into these, but it shows the percentage, the median loss for each type. And again, the same as I said before, the asset misappropriations, the smaller dollar values, corruption, and financial statements fraud is the big ones. Okay. All right. How do we find out this stuff? I'd like to tell you it's auditors, it's accountants that are finding all this stuff, but that's not the case. Over 50, almost 43% of it is just tipsters. That's why under Sarbanes-Oxley, a listed company is required to have a hotline, an anonymous hotline. Usually those are developed or managed by third parties. Internal audits finding 14%. Think about that. 14% of the frauds, of these thousands of frauds, were found by internal audits. And these are people full-time going in and looking at controls. Why is that? Because we talked about earlier, it's collusive. And because we're not using technology, and we're not auditing the way we should, and we're doing non-statistical sampling, which is like finding a needle in a haystack, and literally. And even worse is external auditors are only 3%. So they're going in and signing these attestations that everything's right, and these books and SAS 99 and all these other things, everything's hunky-dory. And it's not, and we know it's not. I don't know, maybe that's a fraud in and of itself. Confessions, others, police, account reconciliations. So, and again, a lot of it is because in the traditional audit method, we are so focused on, I've got to get this plan done. I've got this many days, and I got to get it done. I'm going to check the boxes. I'm going to get this done. And if I see something suspicious that's interesting, but I don't have time to go after that. And if you do go after it, you're probably going to get disciplined for not finishing your audit on time and not having to report it. That's unfortunate. So, and most of the tips come from employees. Interestingly, 1.5% come from competitors. So, yeah, Justin.
Yeah, I guess Ario mentioned that there are a lot of people bringing tips in. Are you familiar with any process used to filter some of the good tips and the bad tips?
Yeah.
You can't act on all the tips, so how do you know which ones are good?
Yeah, and that's what happens to us with our helplines is we get thousands of things. Amanda's upset with her boss, so she's going to say that he's a pervert or something. And then you gotta investigate that. So the problem is it's hard to find because there are a lot of other motives that people have for tipping, and so we get filled up with tips and we can't respond to them. So there is you got to kind of use a risk-based approach and try and manage, which ones are we going to work on, which ones can we eliminate, and you got to be careful because you're liable. If someone records a tip and you don't act on it, then you're culpable because you didn't act on it. Good question. Yeah.
Like with the tip lines, it's the own companies that normally run them, right? So if someone's committing fraud and you report it, what's if they're not colluding with people who
Run the tip line.
Yeah.
You got the fox watching the hen house. Yeah. Well, interestingly, a lot of times they use third parties. And I'll tell you this, even with third parties, when we do surveys and things, you wouldn't believe how many people say, I don't trust this. I wouldn't trust these parties. So I can't tell you that even the third party ones, but this is a, Sarbanes-Oxley requirement that in a listed company you have these tip lines. But it's wiser, it's not required, but it's wiser to have someone outside the company to do it. And that's the problem too. When you see something wrong, and I push this a lot in our company, even with T&E fraud, we have this new system that's finding all the T&E fraud because we're running analytics, population analytics. But when you find something, what do you do with it? Do you say to the manager, go talk to Joe? Well, Joe and I show the example of the cruise issue we had, right, where the person put 1,000 miles in for 4 days in a row, and they get reimbursed at 56.5 cents. and then they took a couple $1,000 and they went on a cruise, and their manager approved it. Can you imagine driving 1,000 miles every day for 4 days in a row? And then we find out later that the manager was on a cruise with the person. That's just an example of the collusion. So yeah, but the tip line should be separated, or should be independent. Okay? Okay, let's look at, all right, where do these frauds happen by location, okay? And this is based on, again, this is all based on actual cases. This is, the percentage of cases from the U.S. and the number of cases. But where is the corruption found by region? And this might not surprise you. Everyone familiar with the corruption index? It's a little map. It looks like a heat map, but it's got the red, and the red's not good, and then green and yellow. But Asia, Latin America, Europe, the United States is actually lower. Why? Because we have the Foreign Corrupt Practices Act. Now, does corruption go on? Absolutely. In fact, sometimes it's hard to distinguish what is corruption. If you go into India, and I had a friend this happened to, and she was trying to start a company there, and she got a bank loan, and the guy took the bank loan, and he said he had a big pile of papers, and he took her application and put it under the papers. And she goes, "How long will this be?" He goes, "Well, it'll be a while." And he goes, "Unless you can do something." And so she did, and he moved it up to the top. But we have stuff, facilitation payments in the U.S. where if you pay more money, yours gets moved up. It's all legal, but is that corruption? If you pay the expediting fee, we'll get you your thing sooner than the person that doesn't pay that fee. So sometimes it's kind of a gray area here. So, but I'm not saying the U.S. is squeaky clean. It's not at all, because Siemens is an example. And I was at an E&Y roundtable the other night out in the Hilton, out in Short Hills, with some of the partners there, and we and some other companies like ADP and Verizon were there, and we were talking about corruption, and it's really starting to get more traction now. The UK now, process is going in place, so you're going to see a lot more attention on it. And I believe, and my Chinese friends in here can tell me otherwise, but I believe in China they're starting to crack down now more than they have in the past, and that's good, because countries that allow corruption or have corruption on an equalized basis have about 17% lower GDP than countries that don't. And that's understandable, because it stifles innovation. If you can buy your way in, and I'm an entrepreneur with great innovative ideas, and I can't, I'm not going to get the opportunity. And I think, and it discriminates. It's discriminatory. It discriminates against people that otherwise would be contributing in a big way. Okay. All right. Positions. Okay. I mentioned this before. Look at positions based on median loss. The biggest ones are the owners, executives. Okay, and obviously because they have employees, and it's lower. Managers are higher. So these are people that have something from the fraud triangle. They have opportunity, they have rationale maybe, and they have maybe motive. But they certainly have opportunity. And opportunity is the one we're going to address with this new way of auditing, with this analytics and automation. We're going to address opportunity. We're going to take away opportunity. It's not going to change anyone's motive, but if even if my grandmother is dying of cancer, if I know I'm going to get caught, I'm not helping my grandmother by having her grandson in jail. That's not going to help her cause. So I'm not going to do it. And then the position, the durations of the frauds, employees, managers, owners, executives. Again, it goes on longer because I know the control system. I can circumvent the control system. Okay? So based on median losses. And again, this report has a lot more slides. I just wanted to share. Now, these are some of the interesting ones. This one I want to highlight, that 42% of all these frauds across operational, strategic, financial, and compliance or corruption are collusive. And in the 2008 report, which you can also get at the ACFE.com website, it says that most all financial fraud is collusive. So again, I just want to reemphasize this. Just think about this. We're going to go out and we're going to spend At Siemens, we spend, $100 million auditing on a four eyes principle across all those areas. The firms spend hundreds of millions of dollars on each account auditing across with a four eyes principle. But if the fraud's collusive, or the issues are collusive, we're not going to find them. I mean, the whole thing's a farce. I hate to say that, but in a sense, And that's why I'm here, and that's why I want you guys to start thinking about how do we change that? How do we start to even address collusive fraud? Because again, if I know that every manual journal entry at month end that's approved or made by a C-level executive is being monitored with some electronic technology, with closed loop alerting and flexible analytics that can be changed at any time, I'm an idiot to go there. Because, and the alert simply says if I see any C-level executive make more than 5, you pick your risk criteria, make more than 5 manual journal entries or approve them at month end or have one for more than $10,000, then send me an alert and I'm going to investigate. If I know that's going on, and it's good to let them know that's going on. We go out and we tell people, hey, guess what? We have a new system now that monitors 100% of T&Es and with a rule set of 150 rules. And we'll even tell you half of what the rules are. And they're constantly changing. What's your motivation to commit fraud? Are you going to do it? I mean, you might come up with something real innovative, and it is a game of the black hats and the white hats that you got to keep, you keep moving. And that's why we'll talk about more in the class later. But it's so important we're flexible. It's so important we can change the rules. I mentioned the Siemens one.
I have a question. Does fraud normally occur with employees who have been out of position for length of time versus who are pulled out of the system?
Yeah.
Is there any operations, when companies process?
Yeah.
So is it more like in general?
Yeah, in general. In fact, I think I know that's in the report. I might even have that on the next slide. How long they've been doing, how long they've been with the company. Yeah, absolutely. Because I'm going to come in. What am I looking for? Not even consciously looking for, but I'm looking for opportunity. And I asked you, I think, in the first class that question. If you could steal $10,000 from your firm that you work for over Rutgers, would you do it? And you knew you would not get caught. You were confident you wouldn't get caught. Would you do it? Joyce, would you do it? How about if you could steal $500,000 and you knew you wouldn't get caught? How many would do it? You know you're not going to get caught. I'm not talking about you're risky. Now, if you could steal $1 million or $2 million, and you knew not only you wouldn't get caught, but you're done. You can invest that at $2 million at 5%, and you're gonna earn on that $100,000 a year for the rest of your life. And you can still work. You can go ski bumming and just relax and enjoy that.
Isn't a lot of it's just like about the opportunity to do it, and
That's
not so
what I'm
much about like the amount of money.
Yeah.
So a lot of people just do it. I think it's like serial killers. Is that they just do it now for money. A lot of people they love to do it. They're gonna keep doing it. That's why they're so dangerous.
Some people just like to
get one over.
and like the challenge of it. I had a guy I went to work for Armstrong World Industries back in 1981, and our top salesman, this guy was just killing it. He was probably making back then, $300,000 or $400,000 a year, and he got caught at the local mall stealing music videos. I'm like, this is dangerous. You gotta find one. But it was
the rush.
Yeah, it was the rush. It was the challenge. I mean, there's a lot of reasons, but that's why, and I think we're really honest. Probably most of us would raise our hand, or at least, I'm just talking about the greed part. Oh, thank you for your honesty. I'm just talking about the greed part of it. If we want to get into the real, my grandmother's sick. Some of the things you heard on here. Yeah, there's always there's a reason, or earnings management. So I just want you to see that this is not, as I said earlier, this isn't scumbags to do this stuff. Now this one I love, the gender. So remember that collusive thing. That's why I'm here, because most of that fraud is collusive. And we're not finding it with the traditional method. So when they tell you to tick and tack through samples of accounts payable, you just sit there and remember that 50%, if it's financial, it's almost all of it. And if it's any other kind of auditing, at least 40% of it won't matter. If anyone hits, so what would you do if you had opportunity, you want to commit fraud? You're going to do collusive fraud, right? You and I are going to work together, or I'm going to get someone inside, outside the company, and we're going to work together. And in that fraud I mentioned with the 350,000, there were other people involved that were helping this person to perpetrate the fraud. So, now this one is interesting. Ariel brought this up. Gender. It fascinates me why, men commit more fraud than women. But it does vary by country. So tell me, I mentioned in Canada, women commit more fraud than men. And in Europe, men commit way more fraud than women. Now, why? I have 2 daughters. I love trying to understand what married women for 30 years. So fascinating. So why are women less likely to commit fraud? Yes.
And they know money comes with it, so.
Yeah. That's a good. Yeah. Yeah. That could be part of it. Caitlin? Okay, so these countries, I think that's a good point. That in these countries, I'll tell you right now, in Europe, women don't have, at least for my observation, don't have the same opportunity. We're not there yet. We made better progress in the U.S. Maybe better progress. Yeah, maybe we really want to. I don't know. And this is actual data. And it's shown this for a couple of years as well. Joyce, what is the real answer? That's probably true. Women have a very special gift called intuition. We're too logical, I think, man, sometimes. It's easy to follow the logic, we can't follow the wisdom. Yeah. Or they make you trust them. Here, listen up, speak up. Hold on. That's possible, I don't know. Okay, just an interesting aside. I don't know why that is, but okay. Okay, and then we talked earlier about the age of perpetrators and the education of perpetrators. So, most of the people doing this are 31 to 46. So, Joyce, to your point, you come in and you're kind of finding your way around in the firm. You're not going to jump in and say, "Oh, you got to come through $1 million fraud." You're going to wait, and then maybe when you get further out, you're making enough money you don't need to do a fraud or murder, or your kids are off to college. That's the biggest responsibility. I thought this is interesting in education, and I think by you guys getting your MBAs, there's a chance of you committing fraud as well. But then most of the fraud is committed by people with college degrees, post-college degrees, or a little less, some college and high school graduates. I think that's kind of interesting, but I think it has more to do with what stage you are in your career and where you are. But it's really no respecter of persons. So again, the thing with what Ariel presented, I wanted you to see how interesting this is, and I'd really like you to see how big a problem this is. And even when I, pontificated at my work, because I'm trying to get, in fact, I won't be here next week, I'm doing a presentation on this automation and new way of auditing and what we're doing in our risk and internal control department for senior level executive team. When I do this, people just kind of say, we are doing some good stuff to prevent fraud too, but it's overwhelming. People say things like, I don't know how to get our own thing. Right? And I talk to our external auditors, yeah, we've got to use more automation. But this idea of perception and monitoring, this idea of you've got to deal with the opportunity, you've got to create a perception and monitoring so people don't see that.
I have a challenge about the material
Sometimes that happens because you have, costs and benefits. So you spend thousands of dollars investigating this issue. And remember, the saddest part about this is that most three-quarters or more of frauds are solved and never done. Because, frankly, we don't want to crash. Fraud, because then if you're a stockholder, pay for us, you're just $10. So that just defeats the problem. People say, I don't even get in trouble. That's scary. And that feeds this perception of opportunity. We've had people that in another company I work for, we've found, and this happens all the time, people that are professional. They know how to go in and make a disability claim, make a discrimination claim, do something, and they're closing. And they go in and they put themselves in situations where they're company millions of companies, and they settle, and then they take 3 weeks to 6 months off and usually the settlements are there, they're outside, they're not public knowledge, they're settled out. Very few can go to court. Alright, so you guys are going to change that, right? You are the generation that has to change it, right? But I do encourage you to get involved in this and take an interest in this because it really impacts the bottom line. It is sexy and fun. It's interesting stuff to do. My brother, partner in the I said, you only take 25% of the job. And for that sort of second bottom line of motivation in life, it makes a difference. It prevents the. My contention is don't put anybody ever in a position of too much power. Lord Acton said that power corrupts and absolute power corrupts absolutely, and it doesn't. I don't care if you're a minister, your lawyer, your corporate executive, a husband, a wife, put them in a position of power. That's why our government has checks and balances on that. And anybody, I don't care who they are and how they start out, power corruption. So don't let anyone be in a position to perpetrate this. Okay, if you could pull out your computer. Any questions? Any final questions? I'll have this report. I encourage you to read it. There might be something from this on the test, the final too. So make sure you know. Not that.
Assess on these guest speakers.
What?
Is that going to be on the final?
Yeah, Ariel told you 3 weeks.
I just want to know. So it's not just going to be like.
We are going to do a review ahead of the final, what kind of topics, but you kind of see some of the themes here, and I'm interested that you guys get the message here that things need to change and understand. Okay, so I'll turn it over to Chi, and we'll work on our ACL.
Okay.
And next week we have a gentleman coming in. I want you guys to contrast ACL and IDEA. IDEA is another top-tier software used by some of the mid-range firms and other companies. It's similar, but it's a different product, and I'd like you to just to see it another one. So. And also, did you guys? Oh, you were going to mention that the manual. We put that manual, that scripting out there, so you guys can catch up.
Okay, so do you still remember what we discussed last week?
Yeah, I
Yes.
just done it. Importing data and files as tables.
Yeah, that's good. But I heard that some students may still miss some part of the lecture last week. So first I'm going to do a very quick review of what we did last week. Okay. So basically speaking, last week we first discussed the scenario of this tutorial. It's about to investigate the credit card transactions by the employees in the network corporation, and to investigate whether the employees have abused their company credit card. And then we start the setup of the project. We import the data. We build a new project, and then we get a very general analysis of this of several tables in this project, and then we examine the expense patterns using two functions: the classify and summarize. Okay. And last week after the class, I uploaded a manual to the Blackboard. It's here, ACL menu. So it's just like this. Okay, and this manual covers most of the content I taught in class. And for last week, like here, we covered these three sections: the set up your project, begin your analysis, and examine the expense patterns. So if you missed anything from the last week, you could follow this manual to go through. We have very detailed step-by-step explanation of the usage of each functions. Okay, and then today I'm going to cover this chapter, the analyze transactions. Okay, and also for your convenience, I upload the course videos of last week. So if you just want, because the manual contains many other steps that I don't cover in class. So if you just want to focus on the material that covered in the class, you could just watch this course video. Okay. Okay. So let's go back to ACL. Open your ACL now. Open an existing project. Here in the interface, open an existing project and choose the project we created last week. Okay. Here, I store the project in the ACL Project folder. It is just the network project. Okay. Then you will see the tables we imported. So everyone is here, or yes? Where is the project?
Yeah, one project.
Not fine. If you create the project with me in class, then it will be in the ACL data folder. It's in your C drive. Let's close the ACL and show you that. Open the ACL and open an existing folder, existing project, and then you should find it in your sample data files folder. Here it lists four projects that come with the software, but you should have the one that you created last week. Okay? So you find it? You find it?
The sample project.
No. It should be named as metaphor, just metaphor. If you directly download the project from Blackboard, it should be stored in another folder.
Like metaphor corporation or metaphor employee data. You have two metaphors.
Metaphor corporation.
Yeah.
Okay. So everyone open this project, right? Okay. So
Again, team up with someone if you have an outline.
So last week we did most of the analysis in the data set transactions in April. Okay, we just get a general idea of what kind of transactions we have, and we summarize the transactions by customers and the credit card. Okay, now this week we want to do the real analysis about the abuse of the credit card. So we want to find among all these transactions, which transactions are not allowed by company. So you see that in this table, we don't have the information of whether each transaction is allowed or not. So do you think which other table we also need to use among all these tables?
Unacceptable codes.
Yeah, unacceptable code. Okay, so let's first take a look at the unacceptable codes table. Double click it, you will see the data. This table is very simple. You only have two fields, the code and descriptions. Okay, so in order to find which transactions are unacceptable, we need to join these two tables to figure out whether the transactions have in the transaction April table have the code here, have the unacceptable code, right? So then we go back to the transactions in April. We'll go through the fields to find a field that exists in the transactions in April table and also exists in the unacceptable code table. And we also could use this field to connect these two tables. So do you find the code? Do you find the field that we can use? Yeah. It is a code here. Okay.
I have a question. Would a more realistic scenario be that you're given acceptable codes and you have to check the ones that aren't in the list? Because I don't think I'm ever going to be given a list of unacceptable codes of all the codes that are unacceptable, but I will be given a list of acceptable codes, and I have to look at these transactions and see which transactions aren't listed under an acceptable code.
Yeah. That's also a situation. But here, it's just the same process to do this. It's also combined two tables, but combine the acceptable code and the transactions in April table.
Yeah.
So now I just want to show you how to use the functions to join tables, right? You can do it in the assignment, in your assignment. Like
Extra credit.
No, but that's a good point.
Right.
And I want you to ask yourself as you're doing this, what are we looking for? Or where else might this apply? The tools are good, but if you don't think through think strategically about it, you might miss it.
Okay, now we already find the field that we can use to connect two tables. Now here we call it the keys. So we use this key field to connect two tables. And before in ACL, before we start to connect two tables, we need to make sure that this key field have the same type and the same length in both tables. Okay. So now, first we are now in the transactions in April table. We go to the edit table layout to verify the type and the length of this field. Okay. We click this. It lists all the fields here, and here in the codes field, we see that it's a numeric field, and its length is 7. Okay, and then let's go back to the unacceptable codes table. We click to do the same thing, edit table layout. Then we see that this code field is categorical data, and length is 5. Okay. As we discussed before, we just want to treat this field as a text field, the categorical field. And for the categorical data, important thing is its length should be equals to the length of its longest value. So let's take a look at the code. We could do a quick sort of this field to see the length of its longest value. Okay, we just click the code field and right-click it. The quick sort descending. So we can see that the largest value for the code is 9752. It's 4 digits. While the length of this field is 5. So we need to shorten the length of this field to 4. Why we need to do this? Because when the software import this data, if they have 5, the length is 5, so they have 5 places to put the value, right? But if the value only has 4 digits, like we say is 1, 2, 3, 4, the value can store like this 1, 2, 3, 4, and then there is a space after that. But it could also be stored like 1, 2, 3, 4, and the space is here. So the space can be anywhere in different record. So if the space is in different places, we cannot compare this record. Okay? So we need to use a function in ACL to first delete all the spaces and to have only the values here. And if the value is less than 4 digits, like we have 3 digits code, and then we could make the space always places at the end. So then we could compare the records. Okay. Okay, in order to do this, let's go back to the edit table layout here. In order to do this, we have to create a new field that could be comparable to both tables. Like here, we could, there is a blue anchor here. We could click it to add a new expression here. We just click it. Okay, it will show the dialog box, just like the filter when you create a filter in ACL, right? Okay, then we type the name of the new field. Right? Let's call it the code sub. Okay. Yeah, because it's a subset of the original code field. Okay. Then you click this function. Then you go to the expressions. Okay. Here in the expression table, we just used before is to use this mathematical signs to compare the record, to compare the values. And then here in the right side, it lists a lot of functions. And this functions is very useful. Now, in this class, we introduced 2 functions that could deal with the categorical data, like here to delete the spaces and to choose the subset of the categorical value. Okay. The first one we want to use is called substring. Here is equal to the start with S. Substring. Double click it. It goes to the expression box. Okay. Substring is used to extract a subset of the string. So it's called substring. SUBSTR. So do you find this function? Substring. Okay. Okay. Then in the string here, we need to use another function called altering. Here it is the third one. Altering. Will you double click it? Will you first choose the string here, and you double click it. It goes to this part, altering. And this function just deletes all the spaces in the field. Okay.
How did that get?
Just delete the string here and choose the third one, altering. Okay. Now, and in the string here, we need to enter the name of the field. Now, here is code. Okay, so you double click this. So this means that the field we want to do want to process is the code field. Okay.
So highlight the string first.
Yeah, or just delete the string and then double click code. Okay. Okay. Now, because we want to set the new length of this field as 4, and we want to cover all the values here. So we just choose the starting point is first is 1, and the length is 4. Okay. If you just want to choose like the first digit of the code, you can choose the length as 1. But now we want to choose all the digits of the code, so we set length as 4. Okay. Okay. Now we just choose verify. See that the expression is valid. Okay, so we can use it. Okay. Any questions?
Question.
Yeah.
What does the function altering do?
Altering is just to delete all the spaces. Like here, yeah.
Terminate.
Yeah. Okay. Then you click OK.
Yeah.
And then you just click accept entry here. Okay, then you see that you can see there is a new field in the table. Then you just close this. Okay. But you still cannot see this field in the view of the table. You can add this field to the view by just click the description, this field, and right click it. Choose add columns. Then you can see this field, all the 3 fields. Double click it, this code set, and then choose OK. You can see that this field is added to the table view. Okay. Okay. Then let's go back to the transactions in April table and do the same thing to make sure that we create 2 same field that it will ask you to save the changes. Just said yes, save the changes, and then go back to transactions in April table and go to the added table layout. Okay, and here because the code field is numeric, so we should first change it to categorical. If you already changed it, just ignore this because it's the original data in my project, so I need to change it. Yeah, AS2. ASC2. Yeah. Then just click accept. And then add a new expression. Here. You can choose the same name, the code, the same name, it doesn't matter. Because it's in different table. And then also we build the same expression here. Okay? Use the substring first. Okay. And then here you can delete the string and add all string. And here the string, you just need to use the code field. Also the code field. And the starting point is 1. And the length is 4. Okay? Yes.
Would we have to check the code section within the April tab to make sure that they're all 4? Like we did in the.
Oh, yes, you should check that. Yeah, before that. Any other questions? So you all are right here. You're all here, right? Then you just click verify. Then you click OK and then choose OK. And then accept entry. And then just close this. Okay. And now you can also add the new field to this table view. Okay. Just right click.
Does it matter where?
Field. It doesn't matter. Just it depends on you. Like I want to add it after the code, so I just click the field that after the code, and then click add columns, then add it.
Gotcha.
Yeah. Code stop, then choose OK. Here you can see the new field added is added. Okay, now we have to do all the preparation steps before we join these two tables. Now we can start to join tables by click data. There is a join tables here. Okay. Okay. So because now we are in the transactions in April table, so this table is used as the primary table here. And then we should choose the key. As the primary key is should be the code sub, the field we created. Okay. And then we are going to choose we have to choose the secondary table. It should be a table we want to join. It should be the unacceptable code here. So we choose the unacceptable code. And then we choose the secondary keys as the code sub. Okay. Then we can see that it also lists some primary fields that show that you want to list in the result. Okay. Here we may want to list all the fields in the transaction table in the results, so we click add all. But we already the keys will always be included, so we could just delete the code sub and the code. Or you could, yeah.
Can you go back?
Okay. Here have you choose the secondary key, right, as the code sub. First choose the secondary table as the unacceptable code table. Yeah, and choose the secondary key as the code sub. Okay? And in the primary fields here, those are the fields you want to list in the results. Okay? So you could choose like the amount.
Want all of them, right?
Yeah, or all of them. You can choose all of them. Choose add all. Yeah, so just choose OK.
Alright.
And then there is another tab for more. Here, choose this tab. It will have some options for you to choose. You want how to join these two tables, how the result will be. Like here, we just to choose the result to be the record that exists both in both tables. So it's called the match result. Or you could choose all the results in the primary table, in the transaction table. Or you could choose all the results that in the unacceptable code table. Or you could just choose unmatched records. Okay? This just show you several choices. But here in this, we want to choose the matched records. Okay?
What does that mean again? That only,
That means that the record exists in both tables. So it means that the transactions that have unacceptable codes.
oh, okay.
Okay? Okay. Then let's go back to May, to this tab, and click this one, resort secondary table. Choose this one. Resort secondary table.
What does that mean? Sort of thing.
This means just the secondary table will be sorted by the key, so that it's better for the two tables to join. If you didn't click it, it's very difficult to join the two tables. Okay, then here you need to write a name for the output table. Like we just type unacceptable transactions or or any other name you prefer. Okay, then finally you click OK. Yes, save the changes, and then you will see the results. Okay. You can see that there are yes. Yeah.
Type into we want to do
table name.
Table name. Yeah, just like unacceptable transactions or any other table name that you want. Yeah. Yeah. You can see that this table, unacceptable transactions table, are added to the whole project, and there are 7 records in this table. Those are all the transactions that have unacceptable code. You can, from the description, you can see that they are cruise lines. The precious stones, jewelry, luxury products, and video games. Also, like the gambling, that are not allowed by the company. Okay. Okay. Now we know the transactions that are unacceptable. What else we want to know? What else information about these transactions we want to know?
Employee number.
Yes, the employee name. So this information are in the employees table. Right? Now we just want to add this employees information to this view and to form the report so that we could report this like result to the managers. Okay? Okay.
Everybody okay? Anybody falling behind here?
Any questions?
We need help there.
Okay, so let's first take a look at the field here. Also, if we want to join like this unacceptable transaction table with the employee table, we still need to find a key. Okay. Here we have amount, credit card number, the codes, customer number, and the descriptions. Now let's take a look at the employees table. Double click it. You see the first name, last name, card number, employee number.
Match card numbers.
Yeah. So we choose card number. Okay, then let's first check the type and length of this field. Go to
Wait, do you have to highlight the field?
No, just need to open the table. The right table. You can see that the credit card is a categorical and it's 16. So it's okay because the credit card number is 16 digits. Okay. Then let's go to the unacceptable transaction table. To check this here is the card number. It's numeric and it's 19. So we need to create a new field here in this table. Okay. So just did the very similar thing. Add a new expression. Like the name could be the card number, sub. Then for the function, it could be the substring first, then all string. Yes. So these are very two important functions for the categorical data here in ACL. All string, and then the string should be the card number. Okay, the starting point should be 1, and the length should be 16.
We got one up here, Chief, where we got the formula in that way, and it's just for some reason giving it an error, but I think Jun's gonna look at it too.
Oh, I think that, yeah.
On the prior.
That's because there may be some problem here. For example, here if you choose verify, it may say that there is a problem here. Because the card number is a numeric data, and I didn't change it to the text format before.
Oh, okay.
Yeah.
Let's try to run
Yeah.
verify on it.
So let's just go back to the original table layout and to change card number to the categorical. If you already changed it, you just could ignore
But
this.
yours actually worked before, right? And then you didn't change the file back. Okay.
Yeah, just choose accept entry and then just create the expression again. Okay? Like car number. S string here. All string.
It didn't get cooler in here, did it?
String should be car
Let's go
number.
shout one more time.
And it should be 1 to 16.
So you have to do this when the length of characters aren't the same in the two fields.
Yeah.
Okay. So you go in, so, alright.
Okay. So then you just click OK. And click acceptable and accept entry. Okay? So you can see the new field here. So everyone are here? Everyone is here?
No, I can't verify my expression.
Yeah, because you need to change card number to categorical field first. Yeah, to the text field here first. Here, just in the edit, the table layout, double click it and change it to ask to.
Yeah, I already changed that.
You already changed it?
Yeah. Format. Right.
Yeah.
Well,
It's the original card number field, it's not the new field.
Yeah.
Right? Okay, let me.
well, no. Where's the TS? No, which one? It's usually here. I feel like I said in marketing. I enjoy marketing. I enjoy
Okay, now I think most of you are fine, right?
Yeah.
Yeah, okay.
Let's merge them.
Then let's close this. Now I'm going to show you a new function in ACL, but also have very similar function as join table. Actually, they did the same thing. But for join table, you can see that finally you create a new table, right? But now the function I'm going to show you is called relation. It's in data, relate tables. You just click OK. And this function is different from a join table because it doesn't create a physical new table. It just creates the virtual relationship between two tables. So you could choose different fields, the fields in different tables, but it doesn't physically create a new table. So if you have very large tables, it could save you some story. Okay, here you can see that this is the unacceptable transaction table. And then you could choose add table to add the table you want to join. Here, you could choose the employees table, right? Just choose add, and then close this dialog box. You will see the two tables are here. And then the key we want to use. Yes. The key we want to use is the credit card number here. We just click it and then drag it to connect to the credit card field in the employees table. You can see there is a link to that between the two tables. Okay? Okay, then you just need to click finish.
How do you drag that?
You first click the field and then you can drag it. Yeah. Okay? Then you just click finish. Okay, now in the unacceptable transaction table, if you try to add some column, for example, you choose the amount field and then you right click to add the columns.
They're going to bring ice blocks in, cool us off. They promised me to do it.
It gives you options here to choose from tables. So you could choose the employees table, and it will list all the fields in the employees table. Okay. For example, you want to list the first name, the last name, and the employee number. These three fields, you just choose these three fields, and then you choose OK. You can see that these three fields are added to the unacceptable transaction.
Can you do it again?
Yeah, just choose the first field, the amount. Right click it. Choose add columns. Okay. Then here there is a from table. Choose the employees table. And then you choose that three columns, the first name, last name, and employee number. Double click it, and then just click OK. Okay? Okay. So this table is the result that you want to report to the company managers. Now here, you could also use ACL to create a fast report. Just choose here, file.
Oh, excuse me?
Yes.
What are at the first name, last name, and the employee number? Is that to show the contact does show the three blank?
No, I think that's because we didn't relate them correctly. Let me take a look at it after. Okay. Then you just need to use data. There is a report here. Data report. Okay. Then you could type the header of the report, like unacceptable transactions. And it allows you to add some more information like the features, like something else of the report. I'm not going to show you everything, just here like the output. If you review the report, if you choose the screen, okay? And then you choose OK, it will show like the report will be like this. And here is the total amount of the unacceptable transaction, the last amount. total amount.
That would concur.
Okay, actually, when you go back to the report function, in the output, you could choose to directly print the report or to choose to save it to text file or the HTML text file. Okay?
Okay.
Okay, so that's it for ACL.